Hey, Steve and Andy, what's up?
Oh, thanks, Scott. What's up, Andy?
Oh, nothing much. Hey, Scott. Hey, Steve. Hello to all my friends out there.
Yes, seeing some recurring names. We're starting to get some usuals.
Oh, yeah.
We're going to have the 2 hour, 2,000 hour, and the 3,000 hour attendance club coming up for some of you. Welcome to Trade of the Week. This is the Tuesday afternoon themed webinar, usually hosted by myself and assisted by Andy. So welcome. Let's get started. Again, the questions panel, like Scott said, Andy will be manning that. I'll be doing my best to give some informative content. But in the meantime, the disclaimer reminds us that we are a software as a service subscription company. We're not advisors. We're not financial advisors. So please do not construe anything you see or hear in this presentation as financial advice. These are the opinions of myself and Andy and anybody else that wants to chime in. So now that we have that out of the way, the quick reminder of our community weekly kind of repeats itself. A lot of things going on, especially the live trading room with Barry. Barry is live Monday through Friday from bell to bell in the market. For instance, Monday is a holiday, we just found out, so Barry will not be live on Monday for President's Day, but when the market is on, it's a great place to hang out. There's hundreds of people in there, a handful of smart people who kind of take the lead with the group, the alpha dogs, and a lot to learn in there. You can sit back and lurk and learn an awful lot for a really good price, which is free, meaning a lot of people are charging a good chunk of money for a monthly subscription to rooms very similar to what Barry offers here in the Trade Ideas ecosystem. So if you haven't checked it out, again, it's free, and you can click the link on our website to create a username to join Barry. Aside from Barry, we've got the afternoon webinars that you're listening to now. Fridays, however, we do not do webinars. We do what we call a support session from 11 to 2 Eastern. And just open forum using the go-to webinar experience that you're having right now in the questions box. And it's a great place each Friday for somebody who may have just signed up and you've got a small punch list of ideas or things that you can't figure out on your own, you need a little help with, or maybe you need help with configuring a scan. Come on into the Friday support sessions. They're not recorded because they can go in a different direction. We never really know what they're going to go. So the beauty of it is that they're live and you guys control what we can talk about. So please, the Friday support sessions are a really unique way to come in and get up to speed quickly with access to typically all of us, Jamie, myself, Sean, and Andy on a good day. And then lastly, on the next slide, we've got what we call Trade Ideas University. It's 4 days of content. It's also live in the same format that you have right here in the GoToWebinar, question and answer. But it's pre-designed content that we go through. Start off on the easy stuff on Monday and finish up with the more advanced stuff on Thursday. And that repeats every week, Monday through Thursday. Trade Ideas University. We used to do one-on-ones, but there's just no way we can accommodate that anymore. There's too many users and not enough of us to go around. So we're going to the group model and have been for almost a year now, and it's been working out pretty well. So as usual, the theme for our Tuesday webinar is man and machine combined. No man is better than a machine, and no machine is better than a human with the machine. And this is really what we're going to be coming into in our lives as we go forward. People, human beings working with machines to give us a curated idea of good information to look at, kicking out all the bad and noisy data. Whether you're building scans to do that on your own with our technology, or you're letting the AI do that for you automatically using the machine learning and kicking out some ideas. Either way, there's a lot going on with that and trade ideas. So February 12th, our agenda is, pretty similar to the model. We'll go over some market recaps. Andy has some thoughts about the Holly AI Day today. I do too. The trade of the week this week, we'll go over the genesis and catch up with where it is right now. The Charles Schwab was the ticker symbol that went out, triggered Monday morning. I'm going to show you a new charting feature, which is coming soon. As is anything that we show you, is typically coming right around the corner. We'll take a fresh sector glance. I really honestly haven't done that much since maybe the open, but we're going to do that together and kind of go through the different sectors and see which ones might stand out. And then we might even, I'm going to set a few alerts as well and share those alerts going forward. All right, was there a support session last Friday? David, there was confusion last Friday, and we apologize for that. It was the test drive week. There was actually 2 links floating around out there this week. Promise you there will be no confusion for the Friday session. All right, so with that said, let's get into the market recap. And let's see, I'm going to do something here. Yeah, this is pretty much where we were last week as we looked at the S&P 500 chart using the SPY as ETF as a proxy. And as discussed last week, the big elephant in the room, so to speak, was the giant 200-day moving average, which is also, I might add, a beautifully perfect flat line. So we discussed the nature of the market, and when you're this close to these areas, you're going to drop by for coffee and see what's going on. So I'm starting here, zoomed out on this candle from early last week, and I'm going to kind of zoom forward as we go into, let's see here, oops, I got to go my cursor. All right, so that we slammed right into the 200-day, and we discussed more than likely there'd be some sideways action. I'll click it forward a little bit more. Not exactly sideways action, a bit of a pullback, but recovered nicely, and then a really nice recovery after we put in today's data. So what we've got here is, again, a market that is being so simple in following the 10-period moving average back here, popped it back up. We hit our target, the flatlining 200 for the most part, a pullback, and once again, a failure to post a close below this rising 10-period moving average. And so now we're basically wedged in to this giant, to this very tight, narrow range here using these 2 moving averages as guideposts. Today's action was obviously very constructive for the bulls, but we still didn't quite get a close above that 200. Let me go back and redraw this, get rid of that error. There we go. We actually closed pretty much right at it. Interesting. So today's close is right at it. And what we've talked about is a need to see the S&P 500 spiders and the NASDAQ Qs start posting some closes above that moving average to show us and prove to us that this is not just a level of resistance to fear. All right, so let's see. Oh, Bob, I think your screenplay might be a little bit delayed. So there's our S&P 500. Again, we still don't have any confirmation. I'll just go ahead and draw once again what the bulls need to see. The bulls need to see a couple of closes above this moving average. What they don't want to see is some sort of an attempt to trade through and then a giant reversal wick intraday popping down through. That would be not what the bulls want to see going forward. So we're real close to seeing what kind of resolution we are going to get. In fact, I'll skip forward to the Dow to show you what this market needs, the S&P, that is. The Dow has already shown us that it's possible. You see how it had resistance back here. It got caught up at its 200 respective 200-day. Gave us about 2 or 3, 4, 5 closes above, which is good. And then secondary confirmation was a pullback and a retest of that level, where that level then became support. So from resistance to support in just a few days, that's what the S&P, that's what the bulls need to see in the S&P. Now, yes, the diamonds are doing it, the Dow Jones Industrials are doing that, but that's not really going to be enough to say the market is out of the woods here. We need the confirmation of the NASDAQ and the S&P to start getting some candles to close and draw above this 200-day moving average, just like that Dow did. And you know, even come back and test it is fine, but that was a good example of what could happen out there and what the bulls need to see. So, you know, again, same thing over here. The bulls do not want to see an intraday rejection of a wick going through and then coming back and closing back down below that line. That would not be good. So again, we are very close to some sort of resolution, I think, to see what's going to happen here, because the 200-day moving average has been a level of interest, especially going back to the S&P and the NASDAQ. So it's been a little sloppy, but it's definitely in play. Lastly, the IWM is dragging up the rear, but coming up, bringing up the rear. Its 200-day moving average is up here. So we've got, out of the 4 indexes we look at here using the ETFs, only the Dow has been able to post some bullish action, closes above that moving average and then moving higher. So imprint on that, bulls. That's what you're going to want to see going forward in the S&P 500 for sure. I don't think I left anything out. So you got anything you want to add, Andy? Well,
No, that was pretty thorough. Yeah, if you pull back up the cues, I just want to, it's kind of like we talk about, the general direct and dry as it seems to be, black and white. So, because I want to show you the cues there, and if you zoom out just a little bit on the cues chart, Steve, you see. Yeah, since we've broken down from that 200 moving average, we've headed that way a couple of times, and then that one time we gapped up and actually traded and closed above it that one day back in December. Yeah, so give it a little time, because what you'd like to see, Steve's right, you'd like to see us get above that 200, but make sure it's just not like a day or two or a day and a half or something like that. You would like to see us trade maybe 3 or 4 days in a row, maybe even 5, get above that moving average before, like Steve was saying, the coast is clear, and honestly it's never clear, but you know what I'm saying, before I get to really feeling bullish again. But
I see David's comment saying that, funny, JC, I've seen some comments from JC who spoke at our event, our summit, saying the 200 moving average is an imaginary line, but the market sure sees it. I know JC, and he definitely does respect that 200 day. But the way I see it, and the way I think a lot of money managers in the bigger picture are going to see it, is that is kind of the line. And on this side of the line, things are probably looking up. On this side of the 20 to 200 day moving average, we are back defensively under pressure a little bit. So I even joked in the past that I made some adjustments to our 401k over here, favoring more bonds in terms of stocks. Well, that's kind of really what fund managers do. And so now, if I find that we do get back into that bullish case and we start moving higher, it might be time to log back in and make more adjustments to my retirement and get back heavier into stocks. So that's kind of the line everybody is in fact looking at. And also, to your point, David, some people, not JC, but some people, they kind of poo-poo technical analysis, but when everybody's following the same levels, I guess it works in that respect. So there you go. One other thought before I was going to leave is, there was a lot of stocks I saw that that were grinding sideways with this kind of action. Like Tiffany, I said maybe watch that last week, but just it can't go anywhere. Best Buy, trying a little bit today, interestingly enough there, but this action has been just grinding sideways and can be a little futile at times if you're not maybe going for some quick near-term targets. So if you've seen this type of action in your stocks that you follow, it's basically a function of where we've been. We've just been kind of trying to find a resolution here for the last week and a half or so. All right, I'm getting good with this pen.
Always forget to use mine.
Yeah. Yeah, you do. You should use yours. I guess that's all I had. I guess when you were going to talk about Holly, I had a couple thoughts.
Sure.
The first one, before you do it, is we always groan, me and Andy, Sean and Jamie, Michael, when we see a big gap up in the market. We go, oh boy, this already. What I'm getting at is we just kind of know from watching Holly over the months and couple of years that the AI struggles a little bit on days when the general market has a big gap up. There could be many reasons for that. Some of the configurations and filters aren't lining up because of that gap up, but for whatever reason, it always seems to be kind of a headwind kind of a day. So with that said, I'll pass it over to Andy.
You gonna pass it, or I should grab it?
I was thinking you were going to grab it.
Okay, I'll grab it. All right, let's. All right, so this is what we were looking at today, and I got up Holly 2.0, which was the best performer, but we could also take a look at Neo and the Holly Grail. Not a lot going on there. One of them was up 62 cents, the other one was down 66 cents, so kind of a wash there. But I will say this, if you're looking, we always talk about, take a look at Holly as a barometer, and from the moment, pretty much from the get-go, the majority of the alerts that came through were longs. Okay, I noticed that Grell did try a few shorts, and you can see every one of them got stopped out. This is where, and I mentioned this the other day, where you have the upper hand. Okay, these strategies made the cut. They were back tested. Everything's legit. They made the cut. The setup was there. The short was fired. You're watching the market. It's a gap up and moving higher. This is where you have the ability to say, hey, I'm going to pass on that. I'm not seeing, I'm not feeling shorts, especially the downward, the chasing the momentum. Maybe if I see a fading strategy, that's another a horse of another color, but yeah, I'm not one to chase downward momentum in a market like we had today. That's the advantage you have. And once again, getting back to Steve's slide, man and machine. Okay, the machine is spitting out ideas. You're the man. You have to take that idea and decide if you want to act upon it or not. And you have so much more to look at. Now, getting back to my point, even though she did fire out about 3 shorts, she did have it looks like 8 longs, and we just looked at Holly 2.0. We know she was all long. And look at Neo today. Even though some of them didn't work, still a lot of longs being fired, all longs. So if you're looking at Holly as a barometer today, I don't see any reason why to be shorting aggressively. And we always say that Holly's much more than just an idea generation for symbols to pay. You can gauge the market a lot of times on what Holly is doing. And today, obviously, if I had to guess, that was probably about 95% longs. Maybe not quite that high, but still, the bias was definitely to the upside. Now, I'm not going to go over all the trades. I do want to point out a couple because I've been noticing this. I can't remember if it's yesterday or the day before. Breakout. Guys, have you noticed breakout lately? I mean, I am seeing some beautiful setups
today. Yeah.
Yeah, look at that. Snaps here. Look at that. That's textbook. I mean, yeah. And Steve, I noticed 3 of these in a row, and I can't remember what day it was on, but
can we take a moment to go back? Because you and I had a good conversation this morning on the phone. We were talking about how that 10-period moving average is more than just a moving average. It's a risk reward. It's a risk management line. Mm-hmm. Go back to the first one before that one even, CDNS. Okay, so you take that trade at that arrow and it starts to flatten out and you're starting to wonder, geez, is this thing going to revert back to that blue line entry point, and am I going to get a flat trade out of this? Well, Steve said maybe watch that 10-period moving average, and if it closes and it posts a candle close below that line, then likely the momentum is over. In this case, it did not do that. It didn't do it all day. What was the next one you had up? The same exact scenario. SNPS, you get in that one. You look at the entry. Oh, it's starting to pull back a little bit midday, but did it close below that line? No, it didn't. That line stayed intact. That's your risk-reward line, guys. I mean, Andy kind of coined that this morning. I call it the fast line or the 10-period, but Andy said it's really nothing more than a way to manage your risk once you're in the trade to kind of help make good decisions, right?
Mm-hmm. Absolutely.
I thought those were 2 really good examples.
Yeah, those are great examples. And getting back to my point, I'm seeing some really good setups, the ones that kind of Jamie always talks about, the range breakouts. So I said, let's go and take a look at the description. Okay, guys, you can find this in our. I'll show you in a minute. I've already pulled it up. But and by the way, Steve, how long has this been out? I don't recall this being out a very long time. I mean, if it has, I've been just missing it.
It might be one of the newer versions that got snuck in there. I don't know.
Yeah, I think it has.
It definitely, I'm with you. It has not made its mark on me.
No. But I tell you what, I'll be paying more attention to it going forward. That's for sure. But anyway, guys, obviously, the AI Holly strategy is proprietary. But if you guys want to go and take a look at some of these descriptions, you can kind of back into this. All right, so let's take a look at this breakout. Tells you right here, okay, that's what the strategy is. You know what the alert is. It's crossing above resistance, okay? How higher than normal relative volume. We're not sure what that is, but you can play around with that. Stocks between $10 and $150, and at least 125,000 shares have traded. This is going to stop, maybe a lot of those early 30-minute, head fakes. Looking for something that has at least traded X amount of shares and moving sideways and then breaking above resistance. And it even tells you, additionally, the stock will be above the midpoint of the previous day's range. Okay, there's another filter for you. Strategy ensures that the leading market indicator has not moved more than, okay, so they got a change in S&P, got a max on that. So, man, I'm telling you, this by reading this, I promise you I can go out and build this. And you might want to take a look at this for some of your base strategies that you use. And remember, guys, you can, fix this the way you like it. And if you do have B+, now you can start using some of these things with your own parameters in B+. And just not be confined to Holly when it makes the cut. So anyway, I wanted to point that out, guys, because I've seen some great looking setups come through there. The way you find this, you just go to any of our, go back to the home page. And you just go to any of our footer sections and just click on AI descriptions, strategy descriptions. It'll take you right there, and then we got a little drop down box, to see it. So anyway, I wanted to point that out. Holly, we're not downplaying Holly too much. 2.0 had a really good day, 2.74 on a gap up day, which is usually kind of hard for Holly. No stop outs today, a couple of reduced risk, and boy, these breakouts are just, man, I'll keep an eye on those. But I wanted to point that out. I thought this was probably more education for you than me just going over and dissecting a trade and how you should have traded and made all this money. And that's not me. I know trading's tough, but I wanted to show you that description and breakout, so maybe you guys can back into that somehow.
Yeah, that would be the base strategy model, kind of what you talked about, some of the bigger, meatier points. But what's unique about the AI is that there's probably 10 more filters on top of that you'd never think about. Distance from VWAP, change in 5 minute, and things like that. But it allows you to have a place to start, and then you can drop that into back testing. And if you've seen any of the back testing demonstration that Andy has done and Jamie have done on their Trade Ideas University, you kind of do the manual version of what Holly's doing.
Exactly.
So kind of optimize. So.
And right. Dan, if you're not seeing anything, I think I guess you're hearing something. It's probably it's on your end because no one else seems to be having an issue, and there's a lot of people in here. So you might want to try to restarting and exit out and come back in.
All right, I'll take it back, I guess.
Okay.
If that's what you got. All right. So before you took it, Christopher had a good point. He said, question, isn't Holly good for swing trading? Answer, PTX. And what he's saying is he probably had no idea the stock PTX existed. It's a small penny stock. But, after Holly put it on his radar, he's been watching it for a little while. So there's the buy tag right there. It obviously came through Holly on the intraday stuff 4 or 5 days ago. But that doesn't mean it's done. It can stay on one of your watch lists. So good point, Christopher, and thanks for helping me point that out. All right, where to next? I believe we're going to talk about the trade of the week, which was derived from a scan that we have not used a whole lot. I don't even know if I have anything in there today. I don't. The washout bounce. It looks for scans that have kind of a sell-off. And let's go ahead and take a look at our chart here. And this was the candle that we were keying off, and there was so much going on here for sure. The washout bounce scan found that after a few days of sell-off, long tail, and then back closing at or near highs for the day. But what's more significant is where it did it and how it did it. Here was the daily chart on Schwab holding its 10-period moving average there, holding it here, and then here's a great example of what Steve's been talking. I got to stop using my name in the third person. What I have been talking about. The candle closed below the 10 period. Now this is on the daily chart. It's the same theory on a 15-minute chart or a daily. This tells us the momentum that started back here has now started to subside up here. We had 2 decent tests of that move on the daily, but then everything broke down right here and everything changed. So keying off of this candle, it did 2 things of interest. It bottomed right there at that 50-day moving average, which where before was showing similar action, and closed on the right side of it, of course. And then more, not importantly, but additionally, filled that gap very nicely. We always say look left on the charts, and if you see a gap fill, sometimes once the momentum is broken, that's where the price wants to head. So really everything was lining up here for what we call the second mouse getting the cheese, meaning here was the earnings report. Here were some people waiting to chase the herd till it felt safe, and so they buy up here, and then they wait, and then they set their stop down here, and they get stopped out, and we say, thank you very much. Missed it on the first round, but the second mouse might get the cheese on this one. So that was the thinking going into the weekend, and it's working. More often than not, when you see a nice trend that's working up, and you see kind of a deep pullback end with this bottoming tail, they call it bottoming tail for a reason, it held. And so we're happy about that. And lo and behold, boy, look at where the first level of resistance hit today. As soon as it hit that moving average, it got a bit repelled. So going forward, the order for this one is to continue to try and post some closes above that moving average and reclaim its move higher. So, excuse me, that was the idea on that one. It's been a while since we've called a trade of the week off of kind of a bottoming tail like that. So it's telling us that the markets are changing a little bit. We've been, more often than not looking for trades. Like let's go back and, for instance, the most recent one, SNV, well, a recent one. We were working with breakout type situations, looking for stuff stuttering underneath and then moving higher. And here's an example, closing above 3 times, testing it as a support, and then moving on its way. So SNV has had some good luck. Unfortunately, IBB didn't, but it was a very tight stop that was recommended. It was essentially, it either broke out and closed above, or if it failed this level right here, it was a pretty tight stop. Well, it broke it, and I'm sure a lot of people did go ahead and sell, but it's coming back for more. It doesn't mean to say that you can't maybe try it again if you set an alert, and maybe we do get a close above this time. And it wouldn't be the first time that I was early to a trade before it made a little bit of noise and moved up. So just a little bit of notes on the last few weeks here of what's been going on with the trade of the week. We were looking for these breakout moves coming out of sideways action, but this week, what's working so far is a nice bottoming tail. All right, when to use the 10-period moving average versus a stop loss? Whoever asked that question, again, using this either as a intraday. It doesn't matter if this was a 15-minute chart. It's not. It happens to be a daily, but it doesn't matter is my point. This is the operative candle right there that tells you all bets are off. And then look at what it did. It even kind of put its thumb in our nose. We broke the support line, then it becomes a resistance line right there, and right there. So now all of a sudden this line has gotten a hold of the price. Well, doesn't mean it has to stay like that forever. We got our nice bounce signal candle here, and now we're right back in the face of this line again. So we're going to need to start posting some closes back above that line. Again, it's an important concept to post a close versus just kind of dip the candle down and then pop back up and close above. That little dip down intraday before the 15-minute candle closes or before the daily candle closes, it's going to head fake you out a lot. So more often than not, if the movement is still going in the right direction, get up, go have a cup of coffee, do something to take your eyes off the sell button and let this candle resolve and close before you decide to make a decision whether or not you're going to exit the position. All right, anything you want to add?
No, you covered them very well.
All right, so where did we want to go from here? Okay, so let me preface this by saying Trade Ideas is 14 years old, and the beauty of this technology and this platform and software is our real-time scanning ability, and now, of course, the AI and the data. What we're not is a charting company, and most of you probably know that, but our charts are slowly getting better, slowly, and I've got a little tease for you all, and as you know, we wouldn't tease you unless something was actually coming. So check this out. I think some of you are going to appreciate this. The cues on the daily time frame. Ooh, weekly? We now have weekly charts. Interesting. Not only do we have weekly coming, this isn't for you guys yet, but it's coming in a soon to be released version, weeklies and monthlies. And getting back to JC, we mentioned earlier, JC loves his monthly charts. There's a lot we can learn on monthly charts. So for those that have been kind of dying for something other than daily charts, again, we're not a charting company, but our charts are slowly catching up to the feature request. So that is coming soon, and Christopher likes that, and Wally likes that. Yeah. All right. Typically it might be a couple weeks before you see something here that gets out to the public, but for now, when people have a frustrating time with maybe the limitations of some of our charts, we just remind them that at any time you're welcome to use the external linking function and go out and link to your broker chart platform or any other chart platform that you are comfortable using. So as we get more and more functionality into our trade ideas charts, that is not going to become as big of an issue. Yes, you're right, David. And how about that? I mean, we even actually gasped, didn't we, Andy?
Yeah, I was surprised to see
mentions, like in the last week's meeting, all of a sudden I'm playing around with it, and boom, all of a sudden it's in a version. So once Dave sets his mind to something and the developers get it going, things do really happen pretty quickly around here. Once something is prioritized, there's always something prioritized. All right, so what I thought we would do finishing is, I believe, let's take a look at the sectors and maybe make some notes of what might be interesting to monitor tomorrow based on nothing more than what the charts look like today. Sectors will pass the baton a lot of times. Something will be strong for a few days and then move on. So let's just look at the charts and see what sticks out. All right, well, interesting. Been talking all morning about the 200-day moving average, and it appears the home builders, XHB, have been riding their 10-period moving average up, and they posted a very convincing close above the 200-day. So that's interesting. Here's our steel ETF, very much below its 200, but looks like it dug in and closed on a nice high wick today. That might have some follow through tomorrow. Semis, pretty much matching where they were on highs late last week, but again, working on that 200-day moving average. So slowly but surely, as some of these sectors chew through that line, it's going to resolve and show itself in the bigger picture index ETFs. Oil not doing anything really spectacular. This looks interesting, retail. I think I pulled up a couple of charts earlier that were retail, like Tiffany and Best Buy. You see how they're kind of mirroring that sector? A lot of sideways action, but now we've got the retail ETF showing us kind of the same thing. Yep. So I think retail needs to be watched closely tomorrow, guys. There's probably a really good case to be made for, a nice breakout above that high. Got a good head start today. We could see a pop in retail tomorrow. Same kind of thing in financials, a little bit of a bigger dip. Oh, look, there's our Schwab candle back here, which I guess kind of a financial. It's a broker dealer, but mirroring what's going on over there, but still under the 200-day. Oil service, not really, just in no man's land in the middle of its range, so nothing really pressing over there. Technology is going to look very much like the NASDAQ, which is right there, so they're mirroring each other. We don't see this one too often. It's the agriculture ETF. We did look at the Dow, and the Dow is setting an example for the other ETFs on how to close and stay above their 200-day. So Dow is leading, we could say. Solars have gotten ahead of themselves, and now they're flagging. But look, they've been ahead of their 200-day for a couple of weeks. Kind of interesting. Interesting when we can use this 200-day as kind of, like I said, a respective waypoint to see how everything in relation to it is doing. Oh, this looks good. Healthcare, higher lows, higher lows, higher lows, getting ready. So healthcare and retail so far look pretty interesting. We'll see. Home builders did too, but they got ahead of themselves. Could be some follow through. There's our S&P. We've talked about that. Here's our Schwab ETF, and interestingly enough, that ETF never really did a full gap fill, did it?
No.
Energy spiders. Well, in no man's land, really, nothing threatening there. We looked at the IWM Russell 2000 small cap. It's still well below its 200-day. Then we get into the banks, the regional banks. That's China, another bank. We looked at the biotech, which was the trade of the week, which got a little shaky and jiggy last week, but it's coming back for more. So once again, keep an eye on that one. It could get very interesting. LUNG, stay away from that commodity. Gold miners have been holding up. They may try and pop out of this thing at any moment. The GDX is probably.
Steve,
go ahead.
Would you mind putting it back on IBB? And this is kind of what I was talking about earlier. Look how many times, if you were just playing the 200-day moving average, how many times you would have got suckered into that. This is why I say you'd like to see these things trade several days above that 200 before you start getting very bullish. Yeah, look at that. Just it could be very frustrating.
Yes, it can. Yes, it can. Gold miners in general, GDX might be interesting as they. This is kind of the bull flag, so I'm keeping an interest in this one. This is well above its 200-day. Now, again, this is a defensive type of a play, so with all the volatility and selling we've had, there's probably a lot of money managers who are getting their clients into gold mining stocks. But that's the junior ones, the J. There's the commodity itself, mirroring, the gold miners are kind of mirroring what the commodity is doing. And this is a textbook trend. Bounced off that 50, making higher lows. Not really playing too much with the moving averages. This is a 24/7 commodity, so it kind of hops around and gaps up and down a lot. But nonetheless, that is looking strong. The gold ETF and the gold miners. That's another China ETF. Silvers, again, might be consolidating just like gold. And then we're getting towards the bottom. TLT, this is a treasury ETF. I think if stocks continue to show good strength and close above that 200-day, we might start to see some decay here in the treasuries as, like I had mentioned earlier, right? The 200-day, if we can close above it, guess who's going to start reallocating out of bonds back into stocks? So I'm sure there's many other accounts thinking the same thing. And then I think we're just about at the bottom here. Airliners. Well, this has been a nice run for the REITs. Andy has a good theory on the REITs, right? You're getting a better return on the REIT dividend than you would some other things, or was that you talking about that?
Well, yeah, it's a sign that interest rates may be, heading back down again. That's the problem. They do better in low interest rates environment because you're right. You can get a better return on them than you can on other fixed income instruments, but look at that incredible move they've had, and that's kind of what it's kind of scary actually. It's like I don't know.
Well, technically speaking,
go back down to zero interest rates, but
I would too. Technically
this
speaking,
is not what you normally see in a rising interest rate environment. That's for sure.
It's been behaving all like a nice move, a nice sideways movement, and then a break out of that sideways. Love that pattern all day long. And then it's testing, but it's starting to buffet like a plane, probably getting ready to stall. Perhaps we don't want to see a close below that moving average. That would mean that the momentum here in the realty REITs, whatever you want to call them, is starting to subside. So, I felt steel was kind of interesting. It might be trying to push a little bit higher. Semis and home builders kind of semis might have a little bit more meat on that bone, but I think what we found really interesting for the most part was retailers. Where'd you go, retailers? There we go. Retailers look pretty interesting. And what was the other one? Help me out. What was the other one?
I'm sorry. I was answering a question. It was retailers, and then there was
healthcare.
Thank you.
Retailers and healthcare. So retailers and healthcare tomorrow, guys. You might keep an eye on that and see what comes of it. And again, that could change in a few days as the baton is constantly being passed back and forth. All right. Thank you for answering the questions there. Christopher had to leave. Adios, Christopher. So lastly, I've got 2 scans that I'm working from, and we might just set a few price alerts here. So let's go into the price alerts, and we'll share this when we're done and clean out what I'm not using, which is going to be probably everything. We can start over. There might be a couple of duplicates in there. All right. So I've got about 8 ideas. Might as well talk about the the genesis of the scans. The first one is coming from the composite rating with also a short float component. I call it the comp rating. And I'm just going to quickly go down. I already know which ones I want to stop on. I'm color coding this based on the short float. So the ones up here at the top have a pretty good short float. So that one's too extended. I can actually use my keyboard here. That one's also too extended. Too extended. Nope. Well, nice day today. Maybe that's what XLV will do tomorrow, but might just be a day and a half of half a day tomorrow follow through. No, I'm going to zoom out a little bit here so we can get a bigger picture. All right. No. A nice trend, but I don't see an entry. Interesting, but could follow through, but I'm not going to mark that one up. That one probably had earnings, and it's doing what I call a horseshoe. It tried to fill the gap, and it can't. It might try to move higher tomorrow. I'm not going to mark that one up, but keep an eye on that one. No. And then, yes, we're looking for those movements under the resistance levels, and this one's kind of fitting the bill. So I'm going to get rid of that orange line and find the highs, 51, I'm sorry, 99. Okay, so today was the high, so at 1701, we will put a price alert for some follow through here. And there is a short float component of about 18%, so not bad. I don't really have any major notes on that one, so I'll set that price alert. Whoops, that didn't write. Why does it say short from above? That's not what we want. Let's try that again. 1701.
Put a little bit higher.
Oh, is it aftermarket maybe?
Maybe so. Put it around. You got that wick going back in November anyway. Try to maybe around 05 or something. There you go. Yeah.
I'll do 15. Okay.
There you go.
Working long. All right, so that's the first one. Continuing on down the scan. Too extended, don't want to chase. I thought about this one. It's kind of flagging, but it seems like it might be getting tired. I don't know. I pulled away from that one. That's an interesting one as well, but I'm not going to mark that one up. Not going to chase. Good volume. Extended. Here we go again. So here's another one that's kind of tucking up right underneath with a nice big cup and handle. Pinky.
Double handle.
Yeah. So let's get rid of that line. Take a look at the high there, 81. Ooh, still we're going to go to 60. It cleared that high, so we're going to right click and go create price alert at 60. No real notes of mention.
Yeah.
It's trading at 60
See
after
if you just grab it, and move it up a little.
Well, but will it untrigger? Let's see.
No, I guess not.
I have to delete it. Right click, I can highlight it, delete it. Okay, let's go back. It's trading 60 after hours, so that's what the deal is. I'm going to put it up here at 60.05. There we go, that one's stuck. More from this one is advantage of this one, although, God, there was one up here that looked even better. Which one was the one that had the, this one, MRTX? Microchip. See how these are kind of two of the same patterns, that one and the one I've got down here, deck. Which one do you like better in terms of?
Well, I'll say this. What I don't like is when if they take out the high and then don't clear it and come back down. And I don't know if that M chip, did it take out that high going back?
No, it didn't. It didn't.
That one didn't. But what about M chip?
Deck. Deck didn't, and M chip, I think it did. Let's look at the numbers. 75 and 80. It did by a nickel.
Yeah, I'd probably go deck. And for some reason, I don't like when they hit that level, and then obviously they're hitting a multi-month high, and they're not pushing through. That doesn't mean it can't tomorrow, but
you see what we're looking at here, guys. This is what I've coined it the horseshoe a long time ago. So you have a gap up, and then a failure to fill the entire gap, and then it moves back up in kind of a U-shaped horseshoe fashion. And just putting between the two of us here, we're going to go with this one. So the high is 146.90, so we'll go 146.91.
doesn't mean you can't do both, and you can just,
True.
Yeah.
Highlighted them both.
So once again, it's an idea, and you guys can decide, if the volume's there.
I think I had one more. Oh, no, I only had 3 from this one. Okay, so I have a lot more in the next scan, which is much more mirroring the current market, the trend change. All these stocks trying to break their downtrends and reclaim their moving averages and then work back higher. So we've got a few. Now I'm sorting this and also color sorting it by the amount of short sellers. So the darker ones up top have bigger short components, meaning if it does go and freak out the short sellers, they have to buy to get out, and it creates a buying storm, what they call short covering. But the first one I have is the sell right there. And this is a juicy one, I think. Decent relative volume today, 1.7, but just look at that beautiful pullback, and it's riding those moving averages. All 3 days we're spiking right back up. This stock wanted nothing to do with selling at or near lows. It was just kind of probing lows and then popping back up and closing near highs. So this is the high right here we're going to key off of, 63. Right click, 63. Big short. I'm going to make notes here. Big short float. Short squeeze possible. Okay, good. I was worried it wasn't going to stick. Next one, back to our scan here. Right below it, matter of fact, DDS. Now this one I'm going to give a little bit of a caveat. When I go over and look at my single stock window, I see a stock here, and I could already tell just by looking at the daily. It's a little thin and can be. So it only did 266,000 today. It only trades average about 225. That's kind of on the low side. So I'm going to put that in my notes to remind people that this one is a bit more of a low floater, but I love the way it's rejecting the wicks to the downside, continues to close above its moving average. This is like a bird in the hand, hopefully getting ready to fly. I'm gonna use this tight ranged out here, and with the hopes that it will come back and clear the range back there in December. So I think today was the matching high. We'll just go a penny above 68.30. We'll go to 68.30. It's not trading after hours. Okay, good. 68.30. Caveat warning. Lower average daily volume. Careful. Next one down is interesting, but I'm going to pass on that one. And it's going to be this one. Once again, stock breaking all its moving averages, breaking its downtrend back here, riding that 10 period many days in a row, getting ahead of the 10 period, pulling back to the 10 period, riding it, moving back higher. So I just think I love the volume yesterday too. Big spike in volume here to kind of help today get through. So look for some continuation on this one. And it's only an $8 stock, so $8.69 is what we want. Again, that one above didn't look that bad. TRUP, maybe it's the name. All right, what was the next one? We got a couple more. I liked home. There we can kind of see what I'm seeing. It butted up against this, pulled back, made a higher low. It's coming back for some more. I think it's going to try and make a move, so get rid of that. And we're going to look at that high right there. 22.79 is where we're going to go. No, I'm going to need to look at that again. 23.48. 23.52 is where we're going to have to go. So it did kind of peek its head up a little bit today. And I believe there's one more. This one's already kind of making its move out of that nice sideways consolidation. So a lot of these setups just left and right. This one's getting too far separated away from its breakout. You could make a case for that one, but this is the final one that I like right here. I don't know why. I just like this volume. What was the event? It wasn't earnings today, but a giant spike in volume, an attempt, even more importantly, to shake people out down there, running the stops and then closing back on the high end of this range. We'll just go for a little simple follow through on this one at 588 and then call it a day. Like the volume spike. All right, so now what I can do with this, guy, is that I've got this code, is I can share these with you, and anybody that has a Trade Ideas account can accept these by basically going, once you right click and copy the file link I'm going to drop,
you
go
got a short in there, Steve.
Do I? What happened?
Home.
Thank you.
Yeah.
Home became a short. Can we edit this? Yes, we will edit and change that to a long. And that's how easy that was. Thank you.
Mm-hmm.
So once you got the cloud code, you can easily just file, load from cloud, and it'll add all these and dump these into your watch list. And the nice thing is if these things trigger, we will all see them at the same time, and you can decide in real time whether or not you want to take action on that. So here's how we do it. And then as soon as we do this, we'll have Scott come in and give a few announcements. Thank you. So that's what I get for talking, and it would have asked me if I wanted to delete them, right?
I remember you actually did that one time, and you had to go back and do them again.
Yeah. Price alerts. I'm dropping these into what's called the chat window, guys, of the GoToWebinar interface there. I'm not going to delete them. That would be stupid. Not even going to attempt to.
No, I think it does ask you, though.
I think it does ask you. So that's that. Any questions before I turn it over to Scott? Thank you, Waleed. Looks like some of you liked a couple of those calls. All right, very good. So it's 5 minutes to the top of the hour. Let's go ahead and bring the slideshow back up, and Scott has a few more announcements to walk us out.
Yeah, thank you all. Yeah, on the way out, we do have a podcast. There was a new episode up last week. There should be a new one up this Friday. Search for Trade Ideas Podcast wherever you listen to podcasts and add that to your subscriptions. You can also look through the back issues, the previous episodes. We've got some great guests in there, so check those out. We have an ebook that's out. Both Andy and Steve contributed chapters to. Just go to trade-ideas.com/ebook and put your email in there to get the download link. It has 5 strategies on how to stay in the green when the market is no longer a buy the freaking dip market. And we've been there for like a year now, so these strategies are useful. Go ahead and get them. There's a discount. The code is Get Holly Ideas, all caps, and it's 15% off your first month or year of Trade Ideas. And you can also use that to do an upgrade. So if you're on standard and you want to get premium, use that code, Get Holly Ideas, all caps, and save 15% off your first month or year. Send your questions to info@trade-ideas.com. That way it gets routed to the appropriate team member. That goes right into our help desk software, and the appropriate person grabs it and helps you out immediately. You can follow Steve at Today Trader on Twitter. We also have at Trade Ideas, at QuantBot, some other handles. Facebook.com/Trade Ideas Pro is the page on Facebook to like, so you can share our fun stuff with your friends. Thank you. We'll have a recording up later on tonight or tomorrow, and send you an email letting you know where to find it. Thanks, Andy. Thank you, Steve. Have a good one.
All right. See you next time. Thanks.
Thanks,
Thank you. Thanks, everybody. See you Thursday.
Bye.